Bitcoin has gone through the roof over the past several months, rising from around $200 to over $1,000 in November of 2013 alone. This is obviously a speculative bubble, and like all bubbles, it will pop. Anybody who has any economic sense at all can see that. Optimists like to compare the current Bitcoin bubble to the dot-com bubble of the late 90s. After all, the dot-com bubble may have burst, but the internet survived. Bitcoin could do the same thing, right? On the surface, this sounds like a reasonable comparison. However, there's a variable in this equation that almost no one is talking about. Bitcoin has a fundamental design flaw, and fixing that design flaw will require completely changing the way the Bitcoin network operates. In its current form, the Bitcoin system is able to facilitate transactions without a centralized database by requiring each client on the network to download a copy of the blockchain. What's the blockchain? The blockchain is a record of every transaction ever made using Bitcoin from 2009 to present. With every transaction, this file gets bigger. At first, the file size was negligible. It stayed below 1 gigabyte until mid-2012. However, with increased interest in the currency, the blockchain began to grow exponentially. By September of 2012, it had jumped to 2 gigabytes. In September of 2013, just 1 year later, the file was over 9 gigabytes, and by the end of November, it had passed 11 gigabytes. If interest in the currency continues to increase and the number of transactions continues to grow at its current rate, the blockchain will easily reach 50 gigabytes within a year and 250 gigabytes within 2 years. Now, the specific amount of time it will take the blockchain to reach a particular size is beside the point. What it comes down to is this. In its current form, Bitcoin is not scalable. The way the system is designed right now, the blockchain will eventually reach several terabytes in size. Of course, the average user will be unable to participate long before that happens. Somewhere along the way, Bitcoin will have to be restructured to allow individuals to use the network without downloading the entire blockchain. This is no simple task, and making the shift will involve introducing a degree of centralization into the mix. An example proposal to address this issue would be to use what some have referred to as supernodes as intermediaries. A supernode would handle the blockchain for you, and you would communicate with the supernode to deposit or spend bitcoins. So essentially, Bitcoin banks. Now, this is arguably still better than the current banking system because Bitcoin banks wouldn't be able to engage in fractional reserve lending. And some have tried to make the case that anyone could theoretically start a Bitcoin supernode. However, given the fact that the blockchain is designed to keep growing and growing, these supernode operations would eventually require massive arrays of servers and storage space with industrial-grade electrical and internet connections. This is not the kind of thing you would run out of your garage. This would be more like modern-day server companies, and such facilities would be easy to bring under regulatory control. Once that happens, Bitcoin will no longer be outside the system as it is now. Maybe that wouldn't be such a big deal if it weren't for the fact that one of the major reasons that people are buying Bitcoin is to bypass the system. That means its value cannot be separated from its form. We know that that form is going to change. We know that Bitcoin is going to have to be restructured, but no one knows how the Bitcoin of the future will work, not even the developers themselves, because by their own admission, they haven't decided on a solution. What's the takeaway here? Don't treat Bitcoins as a stable, long-term investment, because it's not. In the short term, if you own a lot of Bitcoins, you're probably feeling pretty wealthy right now. Good for you. Just make sure you're treating this like a day trader in the stock market who's holding a very volatile commodity. If you sell at the right time, you might make a lot of money. However, those who get blinded by their ideological attachment to the currency are likely to lose their shirts. For more videos like this, subscribe to Storm Clouds Gathering on YouTube. For updates, bonus content, and to influence future videos, follow us on Facebook at facebook.com/stormcloudsgathering. Our Twitter handle is Collapse Updates, and our website is stormcloudsgathering.com.